Welcome back to the Economics of Real Estate. I'm Dylan Silbernagel. That's my partner, Matthew Gizzie. We're here to talk all things real estate. We're here to break down what's changed from June to July. We're going to talk about pricing in various sectors. We're also going to talk about interest rates, how the year's going in comparison to 2024, and what factors are influencing this market right now, because it has been an interesting year. Gizzie, how you doing, brother? How's the summer treating you?
I'm good, man. It's not treating my clothes size very well. Things are getting a little tight on me. I've been eating too much, so we'll have to get out on the bike and straighten that out. But other than that, it's been great. Weather's been super, super hot. Hoping a lot of parts of Canada start getting some good rain in there to
Yeah.
help out all the firefighters and the crops and all that. But other than that, how about you?
Yeah, I mean, on that note, it's like a double-edged sword. The weather has been absolutely beautiful up at the cottage. It's been super hot. But yeah, the forest fires up north are starting to break out in a lot of different areas. Kawarthas are getting hit pretty good right now. Um, yeah, enjoying the summer, trying to take as much time off as I can, though it has been surprisingly busy in our neck of the woods. So um, while we're still watching the market and sales volume being a continued challenge as buyers haven't been showing up as much, there are a lot of people that want to transact and that need support in this market. So it's important for us to be there. And it's important for you and I to keep doing this show, because the amount of people that need this information, and when you break it down so that they can make educated decisions, it's been truly impactful. I've really enjoyed our time doing this together, because I take all of our slides for any presentation I need so that my clients have the most accurate information. It's been fantastic. How is your side? You were saying that you were golfing the other day and it didn't go so well.
Yeah. I golfed kind of 3 days in a row, and on the third day, I was just trying to do the old John Daly grip it and rip it, just try and hit it as hard as I can, and I tore something in the side there. So I've been started off with ice. Now we're on the heat. It's been 2 weeks, still not great. But to be fair, you know what? It's been so hot this last week that even getting out there golfing is a bit of a chore. So I haven't really missed too much on that end.
Yeah, well, keep swimming in the lake and just rehabbing,
Yep,
and I look forward to maybe a couple rounds in the fall.
absolutely, absolutely.
All right, let's get into it. Let's talk about what we've got coming up today. So, of course, interest rates still a talking point, and part of the reason why we talk about these, because it's no longer so much about affordability, though that is a talking point for sure. We sold more homes last year on the Toronto Real Estate Board with higher interest rates, so they are not the key driving factor, but they do give us some indicators about what's going on with the economy and the changes that we've been seeing. So we're going to dive into that so you guys can take some information away from it. We're talking about 2025, the year so far, some of the changes that we've seen in comparison to last year, where we're sitting. We'll talk about some of those rate predictions. Of course, business confidence is something we've brought up in a lot of our last videos. And the reason for that, everyone, is because when we look at what's been happening in the market and we can say confidently, hey, last year we sold more homes at higher prices and at higher interest rates. Prices have come down, interest rates have come down in a lot of places. We'll talk about the difference between variable and fixed. But nonetheless, those aren't the reasons we're not seeing the sales. It's a confidence issue that we're having. It's an uncertainty issue. So we're trying to look at the trends that we're seeing on the business side of things and how that will trickle in to the economy and everybody's confidence. We'll of course talk about the change in pricing and our municipal and regional markets. So Matt, let's jump into it. And what we have here first is just taking a look at where we are in 2025 in comparison to where we were last year. So you guys might have seen in the news, best July in what was it, 4 or 5 years? I think it was something like that. And when we look at our numbers here in terms of obviously where we were last year, so we came in at 6,100 sales for the month of July here in 2025, which is pretty solid. It's a nice number. We're seeing this kind of trend continue. We're hitting over 6,000 sales for 3 months in a row now, which is fantastic. And it surpassed 2024. And when you come back over to 2023, surpassed there as well. Our challenge here so far, when we're looking at the sales side, is a lot of predictions were, as we came through the end of the fall last year and into the start of the year, Toronto board as well thought we were going to outpace 2024's total sales, which was that 70,285. Now, we're lagging behind year to date currently. We're at 37,025 sales. In comparison to this time last year, we were at 41,933. So it does look like 2025 is going to come in under those 2024 numbers. I don't see any drastic change coming soon. But Matt, what I will say when we look at this July posting of over 6,000 sales, we are seeing that kind of COVID trend where our sales did push out into the summer months a little bit.
Yeah, I think we talked about this a lot as well about how the second half of this year could be a lot different. If we look at what's kind of slowed things down, January, February, and March of this year compared to last year was significantly slower. Absolutely, I guess April and uh, every month has been slower up until now in July. Um, and we have come off some of the lower bottoms for July sales that we've seen over the last couple of years, but to be fair, those are really low July numbers. So, but it is nice to see that we're starting to see an uptick. We've had two beats in a row now for June and July with more sales than what we saw last year. The only headwind that I see for the second half of this year is that we are going to have 60% of all mortgages refinance over the rest of this year and 2026. So, what we need to keep our eye on is what kind of effect are we going to see that play out in the market? As far as right now, it's trending in the right direction where
Mhm.
potentially we can see a stronger second half to the year. And if those numbers keep going the right way, it's possible we come close or beat it by a small amount from last year.
Yeah, I'd be very happy if we had just been able to turn it around and come kind of close to where we ended up last year. Obviously, when we get into the business sectors, we're going to see some of the turnarounds already in the change from where our bottoms kind of were in those spring months, kind of that March, April, May, kind of bottom out in some of the business confidence that we were seeing, and we've rebounded a little bit. So I think we are, like you said, we are trending in the right direction. But those renewals are something that we've said, we got to watch for really since these rate hikes began. It's something that's been very, very topical. All right, talk to me about Newmarket today. I know that you had an article in there. You were sharing some of our insight there, and talk to me a little bit about what we got going on.
Yeah, so the local paper reached out and they wanted to know some insights into the condo market in Newmarket. And one of the biggest things that's kind of standing out for me on that is um, we had 44 active listings last month. I believe it's at 42 currently. Um, and last year we had around 30 or so, but typically we sit around 10 to 20 active listings in the condo apartment market, not the townhomes included, but just the condo apartment market. And a lot of this has to do with the new condo units that have come out on Davis Drive there. Um, and we had like 26 of those are from that particular unit.
Mm-hmm.
And we've got another condo unit that's going to be finishing right next to um, the South Lake Hospital that's going to start pumping properties into the market come September. And so we're going to see another push of condos hitting the market in Newmarket. That's just going to add to the amount of active listings and put pressure on sellers and what they potentially can get. The average selling price when I did this article was $530,000. So with this potential influx of another 20, 30, 40 properties hitting the market, it definitely can put a bit of a strain on the new market condo market. Um, and then the other thing is we've got a lot of these units are going to be becoming rental units as well. Now the rental market in Newmarket's holding up pretty strong. I think we're only around 2 months of inventory. So I do think that some of these will get soaked up, but I do think it'll have an effect on what people are getting price wise. So that will, for the condos at least, start to push that price down a little bit further. For rentals, which ultimately will have an effect on price if a investor wants to purchase something like that to um, to rent out, it could, really drastically drop to what price they're willing to pay based on that rental income.
Yeah, so I mean, what it sounds like to me is ultimately the suburbs are not immune to the same challenges the condo market is facing in the city. We've talked about this a lot before, where at least our floor plans, like the actual product they're putting out there, isn't quite as investor centric as it is in the city. The units that are bigger and made for families are still selling quite well. We broke down those numbers before. But a lot of the ones that are looking more investor centric have faced the challenge, like a lot of the smaller units, smaller square footage, very cookie cutter. And when we start to see a flood of inventory like that, we do see the pressure on prices. There's no doubt about it. All right, so RBC's come out and they're taking a look and forecasting what they think is going to happen with home prices here, Matt. And I always take these with a grain of salt, especially from the banks. And I think it was you that brought this up one time. Is you got to remember the banks have ulterior motives as well sometimes, especially when you're looking at which banks are holding the most amount of mortgages that are coming for a renewal. And we know they've been wrong in the past, but I just say that as a grain of salt. It has nothing to do with the outcome of this report. But we do still see that kind of softening there. So talk to me a little bit about the RBC report.
Yeah, I think they've factored in the fact that, okay, we've got 60% of all refinancing going to happen over the next year and a half, starting basically from now. So they think that that potentially is going to weigh a little bit on the price side. I think the most important chart is the bottom right one, which shows just how much demand was pulled forward during the pandemic.
Yeah.
That was quite a beat for the amount of homes that RBC thought that was going to be sold during that period of time. And then if you look where we are now, we're kind of just below that line, not as much as the flip side to where the sales were. Um, so a lot of demand has been pulled back. And so I think we will at some point in 2026 start to see a reversal to where we're matching the forecasted trend for sales on properties. Um, just because we're kind of feeding back on what's already happened during COVID. So I do see that to
Yeah.
start to strengthen, and I do see the price starting to strengthen back up come 2026. But there's a lot of factors, and one of them mainly is how many rate cuts do we potentially get, and what the effect of tariffs are going to be.
Yeah. And I think that's important to note when you take a look at this chart and you see, just like you were saying there, Matt, the amount of demand that came, oops, let me go back there, that came forward. And you're like, well, where did all the buyers go? Well, they've already bought. A lot more
Yeah.
people bought than we're expecting to buy in traditional years. And we see that even on the Toronto Real Estate Board's reporting, just in our sales volume, the 122,000 units that we hit in 2021. You see that demand pull forward when we're usually like averaging over 10 years. I want to say it's like 92,000 when you roll that out. So yeah, a lot of that demand did get pulled forward, and we're just kind of balancing it out now. I love these years. I like getting back to trend lines. I like the market when it's steady and stable. It's my favorite market to work in. I think it's the best time to be helping families. There's opportunities in these markets depending on what side you're on, but nonetheless, I think that getting back to this line is in the cards. We just have to wait for this adjustment to kind of pan out.
Yeah, and I think where prices are at, it will start to accelerate prices on homes
Yeah.
for two reasons. Like income is still moving up relatively hot. I believe it was 3.5 or 3.7% year over year on the income increases, which are higher than what inflation is currently. So that gives people a little bit more ability to put money towards a home or pay a monthly mortgage. And then with the prices potentially softening a little bit more over the next 6 months to a year and a half, it should increase the amount of sales that we have naturally as the prices go to where people can afford them.
Yeah, I think affordability is still very much an issue. Um, I the question
Affordability
is,
for first time home buyers is a big problem because
yeah,
they need that down payment, which is a large chunk of money, and then they also need to be able to afford the monthly payments at the
yeah,
higher interest rate, right?
yep.
Um, and it doesn't feel like interest rates are going to give too much as we get into it later. So ultimately, the price has to have an adjustment, or wages need to have an adjustment to the higher side. We are seeing the wages come up to the higher side a bit, but we're probably going to need just prices to come down a little bit further, at least in the first time homebuyers segment, to see a big rush of people. Because how many upsizers are stuck in those first time in that product as well,
Yeah.
that aren't able to climb the ladder because the first time home buyers are a little bit priced out right now.
Yeah, the way I see it, our market has two really big challenges right now. The first one is the uncertainty that is impacting everybody and making the decisions. Because we go back to, we've sold homes at higher prices at higher interest rates all last year. Prices have come down, rates have come down, the buyers aren't there. So I think uncertainty is still a big factor. The other big factor is, like, as you're talking about the first time home buyers, with the condo market in Toronto being decimated with so much inventory, and now we've got investor problems over there and whatnot. So there's not as much buying going on there, and that's really impacted prices, even on the people that aren't investors that are using it as their primary residence. And the challenge with that is they need good sales in the condo market to then make their move up buy to the townhome market, so that the townhome buyers can move up to the semis or to the detached, and the detached to their trophy home or forever home. And all of that progress going up starts at the base with the condo market, which is in such bad shape right now. And we talk about affordability as well. And so until some of those things get fixed, I think it will be still a longer road to recovery. Because if fundamentally our funnel isn't working the way it's supposed to, and the way it has for all these years, we've got a challenge getting people through the system.
Yep.
All right. So we're sitting here at 2.75 for our overnight rate for the Bank of Canada. And what's this bring us back to, Matt? We're now just before 2009, end of
Yeah.
2008.
End of 2008, early 2009.
Yeah.
So we're still sitting, quite high relative to where we were the last 15 years, for interest rates. So,
Yeah.
again, this is what's holding some stuff up here, because we're not sitting at 2009 prices, mainly
Yep.
because wages are much higher than that. Um, but you know, even when we go back to 2019, the market was quite slow during that period, and that's because they raised interest rates quite aggressively, to try and get them up to a more level field, just because the market was needing that. So we're still sitting a little bit above here, and we need to get this down. But with the amount of money that governments are spending into the economy right now with stimulus, um, the bond market is telling us that governments are spending too much money. There's going to be inflation. This is why it's not teetering to the downside right now.
Yeah, and that's a perfect point to pivot over. And you can see this uptick now. We're looking here at the bond market. You can see how it's kind of been coming down, but we're actually trending back upwards at this point, and we see that reflected in our fixed mortgage rates.
Yep. I mean, the U.S., the big beautiful bill is going to add a lot of money. And then on the Canadian side, our government didn't come out with a spring budget, and they said they're going to push it off to the fall now, which tells me that they need time to get some things done, because they're going to have to come out and potentially, tell Canada that they're 90 billion or 120 billion dollars in the hole.
Mm,
And ultimately, when you're lending to a government, then they need bonds. They need to sell bonds to fund this. So that just means there's more bonds going out into the market, and you can't get the interest rate down when there's not enough demand to buy your bonds. So you have to give a bigger interest rate, a bigger yield to coax people into purchasing that debt. So if there was massive demand for a Canadian debt, we would have cheaper interest rates, but we just don't.
yeah. And so this, when we come over to what Wawa's sharing here, this is across 10 lenders. So it's the average. But when we look at what we're seeing here over the last 30 days is in our 3-year, 4-year, and 5-year, we are seeing an uptick in those fixed rates. And it's like what you're saying, it's what we're seeing reflected here in the bond market. Right. And so while, yes, the Bank of Canada rate has been coming down, which impacts our variable rate more so. We're not seeing that in the fixed. And even on the variable side, we were talking with Nicole last month, and she's talking about a lot of the discounts that you're seeing on the variables have been disappearing for a while now. So
Yeah.
the you got to discern through some of the news that you're hearing there, and actually look at the numbers, because we're actually seeing those uptick, right? All right, Matt, talk to me about my absolutely favorite prediction chart here.
Yeah, so this is kind of implied on the repo market, the bond market, the likelihood of how many cuts that we may or may not have. So the top one is last month. This was July 1st. It looked as though that we had a 71% chance to get a rate cut come September, and then we had a 52% chance in January and a 65% chance in March. So it looked like by March next year, we were for sure going to get two rate cuts. Unfortunately, economic data came out, and now we have a 67% chance of a rate cut in December, which is not a lock. You know, it's a
Yeah,
higher
things
number,
can
yes,
change.
but it's still not a lock. Um, and then after that, you know, January, it's an 88% chance. So that's by January, we're for sure going to get a rate cut, but then that's it. That is it.
Yeah.
It's going to potentially stay like that until mid next year, barring any economic changes that would cause the market to suggest something would be coming sooner.
Yeah, and so this is important when you have clients that are talking about waiting until the next rate cut, or are really basing their decisions on this type of information. You got to let them know that this stuff is always changing. Like we update this slide obviously every month, but even look at what changed there in 30 days. We went from, yeah, maybe you get the 2 to like, yeah, you're not you're not getting 2. You know,
Yeah,
2.5 is where you're at until June of next year at this point. Whereas, the likelihood did increase, like you said, it's 65% at the end of March next year in our last month's data, that maybe you're at 225, maybe you get that second one, but that dried up pretty quickly. And even our most likely cut there in December at a 67% chance, that's even down from what we were going to get in September originally.
yeah.
So we were bang on with the hold that we saw there in July. And it'll be interesting to see if we get this one now at a 67% chance that there's that cut. Really now in December, like it's looking like September and October, for those of you that pay attention to those dates, are looking like they're going to be a hold. I mean, it's a coin toss in October, really.
Yeah, and one of the biggest drivers for the Bank of Canada to cut is inflation. In the U.S., they have a dual mandate, so it's inflation plus jobs. In Canada, it's purely inflation. Now, if they see that there's been a massive amount of job cuts in a very short period of time, and they think that it's going to have an effect on the inflation into a deflationary market, then they would make the cut. But their primary focus is inflation. And, last month, core inflation, which is what they look at, is still in the mid threes, I believe. So they need to get that down to two. It's still sitting too high.
Yep. All right. So let's take a look at our business barometer. This is now looking at our 12-month and 3-month forecast. So the question that went out to these business owners is, how do you expect your firm to be performing in 12 months compared to now? And so obviously we're trending upwards here. This bottom out was those spring months that you see there, and we're doing better than what we saw last month. So that's a positive impact there.
Yep, we've increased a couple basis points. We need for the 3 month, which is the light blue line.
Yep.
It typically sits around 54%. And for the 12 month, it sits around 60. So we are moving in the right direction. We've probably got another 3 months to go on that. I think as long as, one thing with the tariffs and the trade deal is, I believe 85% of the goods that go back and forth are not tariffed because they're part of an agreement with Mexico, US, and Canada. So really only 15% of product is affected by that. If there was an event in which Donald Trump canceled that agreement, if he can even do that, this could definitely change the barometer. But that deal will be renegotiated, potentially next summer or later on in the year. So there's still some time for our government and the U.S. to work some stuff out, and hopefully in the meantime, this stuff trends back to its historical average.
Yeah. Yeah. And so now taking a look at that same business confidence for our importers and exporters, again, you can see we're trending in the right direction. Confidence is growing, down obviously from where we were last year. And it's so funny. Like this felt the same for the real estate market. Really, we were kind of cruising along until November of last year, and then something happened in November. I forget what it was, but it it just threw everything for a little bit of a loop.
Yeah.
Yeah, with those U.S. elections.
What I like about that chart is that selling abroad, companies that are selling abroad had a huge uptick from 36.1 to 40. I believe that's 45.4. So that was,
45.4. Yeah.
that was a really nice uptick because the vast majority of these people selling abroad are selling to the United States of America. So this is a good indicator that we're going to potentially get back to normal, hopefully later this year or early next.
Yeah. Well said. Well said. Okay, now we're looking at average wage plans versus average price plans. And as you can see, when the markets were doing really good, we're running pretty close these lines. We want them as close together as possible. And obviously, as you see them separate, that's where we start to have challenges as businesses are planning to charge more and not necessarily up the wages. So, Matt, talk to me about the difference that we saw from June over here to July and where we're trending.
Yeah, so the average increase in the kind of the cost of the product that companies were going to sell to the market was sitting at 2.9% increase. Now we're sitting at a 2.7. So we've come back. You can kind of see we got up to 3.6 when Donald Trump got into power. So those fears have now calmed
Yeah.
down. They're heading back down to their historical average, which I believe is around 2.2, 2.3. And then on the wage side, we are seeing that roll over to its 2% as well. So that does give us some hope that wages are going to start to roll over from 3.5% year over year, which I believe it is. I'd have to double check, but back down to where we are now at 2.1. So typically, that's where you want wages to hover. Well, wages to hover is in and around that 2% mark.
Beautiful. Yeah, like that's still. I'm looking at these charts and I'm seeing good news in the business sector of things.
Yeah.
Like all that's looking good. Now, we do have to take note. Unemployment is still been trending upwards. We did roll over a little bit there, which is nice, but I think that trend is still something that we need to be a little bit concerned about. So I don't know. Is there anything you want to add there in regards to the unemployment?
Not really. I think last
Yeah.
month was at 7. We're at 6.9 now. It's not uncommon to roll over a little bit, but I think with the business confidence, that we should start to peak out. I think there was a lot of forecasts suggesting anywhere between 7 and 7.5
Okay.
percent was going to be the peak out. So I still think hopefully this will be the peak out because of the strength in the business sector.
Yeah. Beautiful. All right. Now let's talk about all regions looking at condo inventory. This is something that we've hinted at a little bit, but it's the growth is just unbelievable. Active listings there. We're currently sitting at 13,289. It has come down a little bit. I think that's probably maybe a little more seasonality, but we'll see. We'll see where that continues to go to. But just in general, hitting historical highs in terms of active listings there when it comes to the condo market around the GTA. Peel in particular, same thing. They're at 1,868. There was a bunch of new projects that we were watching earlier in the year that kind of came to fruition there in Peel, and so nonetheless, you're still seeing that those highs there. And when you look at sales volume, it's kind of continued on, fairly steady. It's way off from what we would traditionally see. Each of these lines represents sales for that year, as we typically start out a little bit lower coming off of our winter months, ramp up in the springtime, taper off over the summer, one of the little peak there in the fall. And we just, we haven't really seen that. And when we see these sales, Matt, this looks pretty similar to what we're looking at for the overall Toronto board is just kind of cruising. Now these are just the condos, so we're talking about 200 units, but for our 6,000 units a month, this trend line is holding pretty true. So that condo market in Peel is mimicking what we're seeing sales wise on the Toronto board.
Yeah, I think the reason we included Peel, months ago was because it got off to a horrible start this year, and it looked like, those are some bad sales. But we've caught up to some prior years there,
Yeah.
and it
Yeah.
does seem like it's going to trend into potentially a competitive end of year for Peel. But again, a lot of sales didn't happen at the beginning of the year, so it looks like they'll happen at the end potentially.
Yeah, so the good news is, I mean, we're just barely getting over 2023's number, but we're sitting just above what we saw for the last 4 years, which is a nice change, nice thing to see. Let's move over to York and talk about the freehold market and what we're seeing here. And Matt, we got to update some of our color codes, but we see our month over month in the freehold market for York is down 5% month over month, and this is pretty common. I wouldn't be worried about this um, too much in the summer months because it's kind of what I expect. It's honestly
Yep.
it's what I expect to see. July and August, you typically see your average price dip just like you do in December and January in comparison to the rest of the comparison to the rest of the year. Down 2.7% in terms of units. It just goes to show buyers are finding value in different places because we did surpass some of our sales targets otherwise as the whole of the Toronto board, but York Freehold's still struggling there just a little bit. Median days on market are up, moving from 20 to 23. Termination volume is down 2.4%. That's great to see. We've seen typically, Matt, I think the highest we've seen in that is like a 40% termination volume in comparison, right? So that's nice to see. Year over year, pricing is down 7.5%. This, Matt, I think this is actually a little bit less than what we saw last month because some of the York numbers, specifically in Aurora, were hovering closer to 10 and 11% last month. So not terrible there. We know we're down year over year. I don't know if there's anything else that stands out for me as we look at this freehold market right now.
No, I mean, yeah,
Yeah, I think we're good. But looking at the listing volume has been kind of the same all year. I remember whenever a market got bad, they're like, "There's just so many more homes available for sale." It's like, well, no, we're looking at this. We are a little bit higher than what you typically see for new listings, but I think that's mostly because our termination volume has been so high over the last few months. But I'd say we're still kind of right there in the mix for what you would normally expect. A little bit higher for the month of July, I think, because of the lag. But what the challenge is, it's because these active listings are so high. Again,
yep,
setting a record here, beating out our 2018 volumes. Matt, you alluded to this when you were looking at the interest rates and talking about how slow 2019 was. Well, here we are looking at York freeholds in 2018. We're seeing just a ton of active listings, and we've surpassed that. And then here's the story with the sales volume: is we've just really underperformed all the way back to 2011. We're now surpassing the last few years for the month of July, which is great. I think that's because we're slowly starting to get our push from the springtime having, disappeared.
yep,
When we take a look at median price, you know, we've talked about this. Yes, we have now rolled under the 2021 pricing. So we're still handsomely above 2020. But yeah, that's 5 years of sales that essentially that equity growth has been kind of wiped out for the most part when we take a look at median price.
yep,
Yeah. And I
yep.
mean, we saw this coming because 2021 did uptick really quite aggressively in the second half of the year. So we knew it was coming. I didn't think this median price month over month was going to be quite the dip that it was. I kind of thought we'd end up here around 2022. But yeah, nonetheless, coming in under in terms of our median price. And when we come back here, here's a big reason for it. Our months of inventory is quite high right now. We're at 5.88, which has been continuing to trend upward. We were hoping for a rollover at some point, but just hasn't quite come for us in that freehold market yet, Matt.
No, and we were wondering, would we peak out over the 2018 pileup of inventory that we saw there,
Yeah.
because we've been doing this since last summer, and it's carried itself above that now, and um, I think come by the end of this month and into September, we should be sitting probably a little bit higher than that.
Yeah. And it's interesting because it's almost 1,000 units we've added since last year. Because in 2024 we were sitting at 3,000 units. Matt, these numbers are quite startling when you look at them in comparison to where we've been in the past. Because you look at 2022's numbers, and you're at 1,900.
Yeah,
2021 you're at 1,200 active listings, and
yeah,
we're currently sitting at 4,000. This is all for the month of July. So this is comparing apples to apples in terms of seasonality.
yeah.
And what we're seeing is just a tremendous buildup in terms of active listings and available inventory.
Yeah. And at the end of the day, you can't get any price acceleration to the upside that's anything significant when you've got this amount of property sitting on the market. Because
Yeah,
unfortunately, there will be some of those people in those communities that have to just move off that property as fast as they can. And that can help to drive, the comps for that area to the
yeah,
lower bound.
yeah. A very real scenario there is you've got two homes listed on a street, both comparable and probably competitive with the recent comps that sold in the previous months. One of those sellers has to sell in time to be able to close on their next property. They drop their price quite aggressively to make up to get the buyer to see tremendous value there and come and act quickly. Well, now all buyers are going to be looking at that, whatever that price is for what they expect to pay for the next house. And all it takes is your neighbor to make one of those decisions, and now they've made the market for you. That's why when your realtor's telling you you don't want to be complacent in this market, you can't sit back and wait too long, because it's not that we don't have the patience to wait for a good sale or the right buyer to come along. It's like we're concerned about your neighbor doing something drastic, and then they take the bottom out from under you. Because when we look back here at active listings, we know there's so much choice there for a buyer. It's not an easy turnaround if one of your neighbors makes that decision.
Yep.
So when we say that, we're coming from a place of care. I want you to know that.
Yep.
All right, when we take a look here, Matt, at the percentage of homes that are selling above the asking price, there was quite the uptick at the beginning of the year, sitting at 35%, above the ask price there. And now we've tapered off. We're hovering there around 25%. Um,
Yeah, I'm not. I think a lot of people were trying to price the homes low to get people off the sidelines to come and put offers on properties, because it really seemed like for a good while there, like nothing was budging buyers to get in there to give an offer. Um, so I noticed that there was a quite the uptick in holding offers just to try and get people off the sidelines.
yeah.
That's clearly fizzled out in the market that we've been in the last couple months for sure.
Yeah, definitely. There was, and I think there's always the right homes, like the most desirable in the right neighborhoods that will command that type of attention, and the strategy will work. And you're right. In a market where there isn't urgency, you do what you can to create some urgency. So I do think that we saw more of that at the beginning of the year, and then as we continued to see the sluggishness of the sales, it kind of disappeared. We're seeing a bulk of the sales volume still happening in that million to 1.25 range. Second place being 125 to 1.5. That's where the bulk of all of these sales are happening. And Matt, as we've talked about active listings by price range and where a ton of inventory is sitting, is in that $2 million plus price range. Second part coming in there at the 125 to 1.5 range.
Yeah, I mean there was 92 sales there, so that's a good sign. Typically, it's a lot less than that. Um, so I think we did have a little bit of an influx in the amount of sales on the 2 million plus.
Yeah. And it's interesting to see that, 76% of the homes that are out there available for sale are detached houses
Hmm.
when we're looking in the freehold market. You're 18% there for your towns, 6% for your semis. When we come over to the sales side of things, we're looking at 53% of the sales are detached. So it's not proportionate in terms of like the inventory that's sitting. And the reason for that is, the higher prices definitely in the detached market in comparison to when you're looking at the towns or the semis.
Yeah, I don't know why, but for some reason, if you look at that chart, the 2 million plus last month was 1,063,
Yep.
and this one's only showing 404. So I don't know if there was an error on our side with that, or if that many higher end properties came off the
Left the
market. So
market.
I'll have to double check that.
Yeah. Let's take a look. Let's take a look for sure. All right. Moving into York condos. And, oh, let me go back one. We saw an uptick in median price by 1.6%, which is fantastic news. So it's been hovering pretty steady. I'd say around that anywhere from 630 to 650, kind of the median price seems to be where we're finding our York condos. Transaction volume fell decently to 6.5%, or by 6.5%, I'd say. Termination volume is quite low, so that's a good sign either that people are riding it out or we're starting to get in a good range in terms of pricing. And I think, Matt, when you see a little uptick in price, I think that's the sign that for the majority we're seeing sellers get their home pricing right
Yeah,
now in the condo market.
yeah.
This has come down a little bit. We're down 5.7% year over year. I think it was at 7% earlier in the spring. So we're seeing that adjustment. And Matt, this is a good reminder as we get into the summer months and we're comparing some of these numbers. In the springtime, we had a strong spring in 2024. So these numbers were really exaggerated.
Yeah.
But now that we're coming into like the slower months, we had started to feel this impact in 2024 as well. So these numbers should start to contract just a little bit.
Yeah. And just to go back to the chart we were looking at for total sales, I think it was the first chart that we brought up in the beginning. We can see for condos when you look year to date, sales are down 21%, and that's mostly just because the beginning of the year slowed everything down so much.
Yeah. Yeah, to be down
And condos had a
21%.
big part of that.
Yeah, 100%. 100%. And then here we go. This is a difference though. In a lot of markets we're looking, our new listing volume is high, but it's in the mix. It's not necessarily setting new records, but in the condo market, we're really seeing new highs even in terms of new listing volume. And like we said, could be up a little bit higher because of terminations, but even last month we saw terminations fall quite considerably in comparison to the rate that it had been growing at. So we're just seeing more people put those condos up for sale.
And there's new completions that are hitting the MLS as well.
Yeah. Yeah. Active listings, again, setting new records. When we compare this back to 2021, there was 483 active condos. We're now sitting at 1,655 active condos. Even when you go back to these were all run up years to 2016 anyway, but let's call them more normal than what we've seen since the pandemic. You're still under 1,000 units available at any given time. That eight to 900 in that range.
Yeah. Yeah.
You know.
Just to kind of show just how crazy this has gotten in the last 2 years, even with last year being at 1244.
Yeah, and so here we go. Median price just kind of been trucking along. We are staying above the 2021 pricing, which is great news for York condos. Um, yeah, yeah, good thing to see. Coming to months of inventory, we're at 7.49 months. Important to note that this does include condo townhouses as well as condo apartments. All right, Matt, I'm going to throw it to you. Talk to me a little bit about what we're seeing right now in the new market freehold market.
Well, we're seeing month over month down 14.4% on the price side. So clearly, a lot of cheaper homes passed were transacted over the expensive side. I think that's why we didn't see an actual 14% decrease. Just overall, that's kind of how it came in, but it's still showing, some weakness in that market for it to be down 14.4%, even with transactions being up 18.5%. And as I change this color on the middle one, that's year over year. we're up 18.5% on the transaction side as well. So that's quite strong.
Yeah.
But again, when we look at the year to date over on the right side, we're down 23%. Again, that has to do with the really slow start that we had to the year. And what's so surprising is even with new listings, we're down 23.3%. But for whatever reason, we've got this 14.4. Again, I think it's just cheaper homes trading hands instead of the more expensive ones. Um, and then even days on market, we went from 16 days on market up to 26. So properties were sitting there longer, and look at termination
Yeah.
volume falling, almost
Yeah.
20%. Um, so some confusing numbers here, especially when you see, the median price really throws everything off when it says 14.4%.
Yeah, it does. It does. But I think when you see our days on market increasing, you can imagine a world where prices are coming down a little bit. But then you get conflicting because our transactions are going up, which usually implies stronger pricing for the most part, or at
Yeah.
least balance. So with such a drastic change of 14.4%, I think what you're saying is right there, that we're seeing more of the smaller homes or lower priced homes selling currently, which again makes sense. You're going to find more buyers at those price points than you are for the more expensive stuff right now. Um, Still, there's no doubt that there was a softening in comparison to the previous month when we take a look.
Yeah. Because I mean, transactions up 18, new listings down 23, terminations down 20. Typically, those are signs that you're not going to be down 14.4%. But
Not typically. Not typically. See, and again, here we are, new listings, right where you'd expect it to be, and it's just that we've got more homes sitting, but better than what we've seen in some of the other areas. We're not setting record highs in terms of our active listings. We're sitting at 302. Funny enough, very similar to what we saw in 2017 at 303. Now, 2017, by this point, we had been impacted by the Fair Housing Plan announcement in April, which, to be honest, when you're going through it, it felt like somebody had just flipped a switch. It felt so instant in terms of showing activity, in terms of sales, pricing impact. It was a very interesting time. But nonetheless, we're not like, these years are above what we would normally expect. We should be kind of down in this range, but still, we're not the highest we've been in regards to those active listings. Sales volume is slowly finding its way back into the pack. It'd be
yep.
nice to see this keep climbing into here somewhere. That's a great sign for new market freehold, just in general. Very positive chart that we're seeing there in regards to sales volume, and a lot of that had to do with that big uptick that we saw, Matt. That the sales volume increase has made a difference.
It has. Yep.
Um, so that's nice to see. When we come in here to median price, there's that 14%. It is quite drastic looking.
Yeah.
It'll be interesting to see what happens in August if we get back to some different home selling. Um, I've got to feel like this is going to be more of a blip than it will be a trend, but
Yeah. I think.
nonetheless, it's pretty stark.
Yeah, I think we're going to be close to the other two lines in August, if not just a little bit below it.
Yeah.
We can see the wave pattern since basically March, where it goes down and then up. Just clearly because of the price of the homes that are trading hands at that time. Uh,
Yeah.
it was the lower end type stuff. So if we see an uptick in the value of homes selling, of like the more maybe a 4 bedroom or a 5 bedroom, then we should probably end up just around those two lines or below.
Yeah. I mean, look at the big waves that we saw in 2024 last year, particularly August. That was like the worst August dating back to the 90s.
Yep.
Just that big dip that we saw there, right? So optimistic that this. I don't know if we'll really turn back up. It's not a typical time to see that change. I mean, 2021 you saw that change, but if we dated this back to 2011, you don't typically see much price growth from July to August. So a
You
leveling
don't.
out would be, I think, the best we can hope for.
You don't, but at the same time, we beat last year's June sales and we beat July sales. So if that trend does continue into August, it is possible. If we
It is
fall off from
possible.
that trend, then yeah, for
Yeah.
sure we're not going to get back up there.
Yeah. I mean, we're not talking about too much money in terms of like freehold housing, so there is a chance that does come back around. Just
Yeah,
not a seasonal trend, but that dip is bigger than we'd normally expect as well. So I guess
yeah,
all things are up in the air. Sitting at 4.23 months worth of inventory, fairly balanced market there that we're seeing. Great place to transact. It just in general, if you can be transacting in a balanced market, it's a nice thing to do. So not very often that we see that. We, as you see, constantly trending downwards to these seller markets. Um, and buyers, if you're out there, look at how rare it is to be in these buyer markets. You
yeah.
know, take advantage of it. This is the time that you've been waiting for. It's not going to get better than this.
It's
You know, I
not.
mean,
And
I know we talked about there's a lot of factors out there that could make things a little worse, but when you look back statistically, do you want to wait 15 years for these two chances to come again?
yeah.
Like, no, take advantage of it now. It's out
And
there.
there's, you know what, there's fantastic changes that are happening in Newmarket. You know, they're expanding Young Street. There's a ton of new factories and warehouses being built.
Mm,
A new massive strip mall up by the 400 or the 404. You know, so many changes coming in. So many fantastic anchor employers in Newmarket as well. You know, at these prices, it's a fantastic place to look and to grow a family.
yeah. All right, moving into Aurora freeholds, we see a little bit of a price growth month over month. So we're up 1% there. Transaction volume fell in this case, down by 20%. So we moved from 46 units to 37 in our freehold market there. Days on market jumping quite considerably month over month. That's tremendous, going from 19 to 32 in terms of median days on market. Terminations up 9%, moving from 89 a month to 97 a month. Year over year change. This is a nice change from Aurora last year, and I noticed that Aurora does this a lot. It's like month on, month off, month on, month off in terms of the median prices. So, you know, stats are never perfect, but this I would say is more in line with what I would expect to see in terms of what's been happening in the market. But yeah, down 1.2%. We'll watch for that. If I was a betting man, I would bet that that number will increase for next month. Um, actually, I don't even know if I want to say that because August last year was so rough. So I don't know if we'll see that. We actually might see price growth when we take a look at that. But down 1.2%. Transaction volume year over year down 31%. Year to date, mimicking that at 33%. We have just seen a lot less buyers taking advantage of this market. Year to date price change. This is probably maybe a little bit more accurate, down that 8%, but you know, it's interesting to see there in terms of what's been happening. Um, our list prices, they have adjusted downwards. We're down 4.6% in regards to list prices. So I think people are trying to dial in those prices just a little bit more, which is why terminations are only at 9% instead of some of the higher numbers that we've seen. Listing volume, little high, but much more in the mix in terms of our new listings. I will say in other areas, it's kind of smack dab in the middle. We're maybe running a little bit higher here. And when we take a look at active listings, it's up there. It's not as high as our 2018 numbers, but it's up there. 20 last year we were at 205. We're now sitting at 274. 274 again, very comparable to 2018. It's funny how 2025 and 2018 are kind of mimicking each other a little bit in a lot of areas, particularly in regards to listing inventory and sales volume. You know, we had that little swell there in April, May, and tapering off now in terms of what we're seeing, and again, well below what we would expect to see over the last 15 years. Median sale price. So I mean, we're holding on. We're holding on, Matt. We had crossed over 2021 for a couple of months there. We're now back up over. It was a strong June in fairness, or sorry, a strong July in fairness. So that's not too bad. We're sitting at 1,270,000 for our median price. Dating back to 2021, it was 1,220,000. So we're 50K up from that, and still surpassing just under last year's, just under 2023's, and beating out 2022 and 2021.
Yep, that's it's holding up strong. Aurora is a very popular place for people, so
Yeah. Here's the challenge, though. Very much a buyer's market when you're taking a look at months of inventory.
Yeah,
Sitting there at 7.69 months currently, there's a ton of homes out there for sale. Buyers, if you want to get into a great spot, come take advantage. You've got lots of choice. There's some downward pressure there because of those options that you have. Um, come to Aurora, make a purchase. We've got some great listings out there at fantastic prices right now in our office.
yeah,
Come buy these homes. They're stunning and you're getting them at a great price. DM Matt or myself right now. If you're looking for a home in Aurora, we have fantastic options for you.
absolutely.
All right, Matt, talk to me about Georgina.
Yeah, so Georgina, we saw a little bit of a price increase at 0.6% on the month over month. Year over year, we're actually up 0.4%, which is a nice sign. But if we look at year to date, we are down 6.7%. So Georgina on price wise is definitely held up a little bit better, but let's not forget Georgina kind of saw a pullback in the price a lot earlier than some of the cities or the other like Newmarket, Aurora, some of the other towns that we're going to look at just because of their proximity to Toronto. So Georgina definitely kind of saw that pullback price wise already. So I don't expect big pushbacks, pull downs on the price wise for them. When it comes to transaction volume, it did fall off about 10% from 64 to 58 month over month. Year over year, not bad, 4.9%, which is almost half of what we're seeing in Newmarket Aurora, where they were at around 8, 9, 10. And then even the year over or the year to date change at 12.1% for the transaction volume, down 12.1%. We were seeing in some of those in Aurora it was 33%, and in Newmarket 23%. So definitely holding up a little bit better and not losing as many transactions to start the year from last year. New listings are flat month over month, which is a good sign. Well, not the greatest sign actually, because the other towns were down um, quite a bit. So they did see a bit of an uptick, or they're still at an upper level, especially when we look year over year at 11.8%. And then median days on market, we're seeing it pretty much across the board. They were up 60%. They went from 18 days to 28 days. So we're definitely seeing a theme of more days on market. And then when it comes to termination volume, terminations down 11.5% month over month, which is a good sign. As you said before, we're starting to get homes priced a little bit better,
Yeah.
and they're potentially selling within, you know, the time window before they adjust price or pull them off the market.
All right, taking a look at the visual representation of that, you can see these new listings. Like you said, they're flat, still
Yeah,
hovering a little higher. Like you said, we saw a decline in some of the other areas. So this will put us actually at the highest new listings have been in Georgina for the month of July. Um,
yeah.
going
2017 had 216, so we just overtook that. It's a very thin pink line there,
yeah,
so it's kind of hard to see, but I do expect them to start to roll over just like they have previously. They got off to a really slow start with the new listings, and I thought that for sure we would be hovering around the middle of the pack, but we did see a
yeah,
bit of an increase when it came to that. And that's kind of playing into the active listings in this market as well. Again, just like some of the other markets we've looked at, they're sitting at all-time highs at 385.
yeah,
And then when we look at the sales volume, sales are struggling. They're beating a couple years, but in the grand scheme of things, sales are sitting at a low and they're trending. They popped up a little bit there now, but they're starting to trend downwards. So if we don't start to see a little bit more strength in the sales side to mop up some of that active listings, this could definitely play itself down to the downside as the year goes on.
yeah.
And then price wise, price is still holding up quite well. You look at
It
those
is.
charts, you're like, all hell must be breaking loose. But no, this is the what is this the second best year for prices
Mhm.
2023 saw 820, and we're sitting at 815. When we look at 2024, we went down 790. There was parts in May where we were well below all the other months when it came to price wise, but we are starting to see a little bit of an acceleration in the price, or at least holding up steady this year.
Yeah, it's nice to see, and we've mentioned that before about Georgina, just kind of like cruising along. They're not as impacted, it feels, on any given month because they had their adjustments kind of earlier on. Is really the way that it went for Georgina. But like you said here, it is starting to stack a little bit. We are trending upwards in our months of inventory. And I think it's because those new listings just kind of maintained instead of dropping off as quickly as we saw in other areas.
Yeah. And then, yep, months of inventory, 7.5 months. Um, we'll see if this month it starts to roll over in August and starts to slow down.
Yeah. All right, taking a look over at Simcoe, we're still seeing a little bit of a price adjustment there in terms of our median price coming down 1.9%. Not bad for a seasonally adjusted time. Transaction volume down 6.8. We talked about July in general beating out a lot of months, but in some of these freehold areas, we have seen sales come down. It just depends kind of where you're situated right now in terms of how we're seeing those play out. New listings, here we go, Matt, down 7.4% compared to Georgina's, maintaining. Our median days on market creeping up there just a little bit, going from 23 to 27. Termination volume hovering kind of steady around that 9%, like we've seen in some other areas. Our year over year change for July, not bad at all, down that same 1.9% in comparison. Transaction volume down 6% year over year, 20% year to date. Um, yeah, interesting
So
to see for some.
for Simcoe, this is even further north than Georgina. They already got hammered over the last couple of years. For the median price to be year over year only down 1.9%, that tells me they're getting very close to a bottom.
Yeah,
Their year to date change at only 2.1 per down 2.1%. That's very strong as well. Starting to see
yes.
new listings roll over. And then when we go into the new listings volume and into these charts, they're starting to paint a different picture than what we're seeing further south. So not a bad looking market in Simcoe.
Yeah. Their new listings is right back in the middle where you'd kind of want to see them. Active listings, again, not even the highest that we've seen. They're beating out a bunch of months there. And it's funny enough, the months that are above them are dating back to 2011 and 2014. It's not even the 2018, 2019s. It's 2011 to 2014, which is pretty interesting time to see those active listings being
Yep. They
that
just
high.
struggle like everyone else when it comes to the sales volume. It's
Yeah.
just sitting at
It's
big lows.
Yeah, yeah, it's like a 15-year low we're seeing there, and how that carries out. But you know what? What was kind of positive is our year to date in comparison to last year wasn't that far off. And sure enough, you can see these lines. Here's 2024. You can see them just kind of mirroring each other pretty closely. So I don't know, not terrible. I mean, at the end of the day, you never want to see the sales volume that low, but we're kind of holding steady to where we were. Like you said, you can see that we're kind of at the bottom. Like we're in that trough now, where I don't anticipate any more big drops. It's hovering to where we were.
Yep. And
Median
the price is
price.
holding up steady
Yep.
for what we've seen. Like, you know, um, all those years are very, very close. 780,
Yeah.
776, 783, 775, 760.
Yeah.
These are solid. These are sticking together pretty close, and it's showing that it's being quite the resilient market.
Yeah.
And
I
this
think.
is the one market I'm interested to see how it finishes the end of the year, because
Yeah.
if you look, a lot of these years finish strong going into the end of the year. Only 2022, which was the real big downturn off hitting our peaks, was the one that rolled over. So I'm really interested to see how it shapes up. Because even when you look at what's 2024, 2024 had a solid ending to the year. So um, I think Simcoe could finish it with higher prices than what we're seeing today, closer to the end of the year.
Yeah. No doubt. This would be the one thing that could change that, right? We're
Yeah,
still looking at these high months of inventory, 7.4 months coming into the um coming into kind of the end of 2024 there. We did see a little bit of a drop at one point. So it'd be interesting to see how that kind of pans out because we're looking at 2 year stints here. So, yeah, we'll watch. We'll watch. But like you said, good market to be in and a good market to take advantage of. And even on the selling side, like I, I feel like you're at the bottom. It's a great time for buyers to get back in there. There's opportunity to be had for both sides, really, and you can start making your plans. And when you take
yeah,
a look at the percentage of homes that are selling over the asking price, you're not seeing a lot of that there. But there has been a slight uptick from 11 to 13% um, in comparison to because
which
really I
is a
guess that was
positive
last month or
because
the month before there was at 11%.
yeah, I mean, the other places that we've looked at today have not had any upticks
Love it.
anytime recently. They've been making new lows or really pushing down for the year, and to see them at least up 2%, is a good sign that properties are starting to be priced where the buyers are interested in them.
And what an interesting time to see an uptick in home selling over the asking, but the month of July. Wouldn't have guessed it. All right, Matt, talk to me about Barry freeholds.
Yeah, so all the colors aren't there, unfortunately, but the median price down 4% month over month, down 6.7% year over year. But year to date, only down 2.9% as compared to last year. So there's some good strength in that. When it comes to the transaction volume, it was down 12.5% month over month, 14.2 year over year, and 18.2 year to date. So definitely transactions have weakened in Barrie, which has resulted in the weakening price. And then the new listings month over month down 8.2%, but year over year up 23.5%, which is interesting. And then year to date, you're up 11.9. So they are starting to see a little bit of a boost in the city of Barrie when it comes to the new listings. Days on market, again, same problem we're seeing everywhere else. We're starting they went from 19 days to 24, or almost 30% month over month. They're up 20% year over year, and 31.3% year to date. So we're definitely seeing homes sit on the Barrie market longer. And then termination volume, year over year, they're at 52.1. So I don't think Barrie's quite got their pricing where it needs to be just yet. Because we are starting to see, year over year, there's still a lot of places that are having to reprice.
And when we roll into the charts, you can see new listings. Like we said, they're coming down for July, which is great on the trend line for what you would expect to see in comparison to previous years. We're seeing our active listings up there, but not as bad as our 2018 and 2011 numbers. It is funny how in Simcoe and Barrie, 2011 to 2014 was a bit of a challenging time in those markets,
Yep.
which I think it's just that lag effect, right? We're coming off of um, '08 and '09 with the financial crisis, and it did. I think it just took a little bit longer for the housing market to find its way up there
Yeah.
in terms of those run ups. Sales volume, more of the same, Matt. It's trotting along at a steady pace, but it is well below what we would like to see in comparison to previous years. Buyers need to find their way back in there, like we talked about in some of those other charts. There's really been two buyers markets in the last 15 years, and you're in one of them right now. So if you're thinking about home ownership and it's something you want to take advantage of, get into conversation with somebody because these are the two times in the last 15 years that you can take advantage of it. So don't
And
sit
I,
on the sidelines and let it pass you by.
yeah, and there's so much doom and gloom talk saying, oh, the market's going to crash. Like you've seen the vast majority of a market downturn. Number one, number two, Simcoe's already seen the vast majority of the downturn. We're not building anything new right now. Builders aren't out there starting new projects, building more homes. There's going to get to a point where we're still bringing in new Canadians. The government's still stimulating the economy, which is going to devalue the currency. Like now is the time that you need to get prepared to get into the market, get out there, negotiate with sellers, get a better deal potentially. This is the time to do it, and not in 3 4 years complain that housing prices are too expensive when you had that great opportunity to get in there and get a place for a great price.
Yeah, that's great. I think it's a reminder that we've been here before. Like, you look at all the stuff that was happening in the 50s, 60s, and 70s, and then in the 90s. You know, you'd love to go back and buy a house during those turbulent times when it looked like it wasn't going to be like you weren't going to turn around. And so I think it's just that reminder, like you said, Matt. There is a lot of doom and gloom out there, but this is just another cycle. We've been through these cycles before. They're always terrible when you're in them. They always feel terrible when you're in them, but it's also when the greatest amount of wealth can transfer and when the most amount of opportunity is there. So you just got to be in the position and brave enough, I think, to go against what you're hearing in the news all the time to be able to make that decision.
Yeah, and two other points is the demographics aren't turning over in Canada. Like our population is growing, will continue to grow. There's the initiative of having 100 million people in Canada by 2100, which means we're sitting at what, 43, 44 million people. They want to add a lot of people, number one. And then number two is go look at a chart of the M2 money supply. It goes parabolic. So, there's more and more and more and more money coming into the system at all times, which, that money goes to real estate, it goes to assets. To sit there and say, oh, the market's going to crash 20%, just from those two things alone, you're not going to get another 20% in this market.
Yeah. 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 We've seen the big correction. Again, median price trucking along. It is down comparison to our previous years. We're just above, well, not just above, we're comfortably above 2020, but it's the last year that we're above for the last 5 years. We have seen that come under. It will be interesting, Matt, to see if we can kind of cruise out over 2022 because they had their correction there. Really, I mean, here it was in March where we saw in March and February where the rates started to go up, and they trucked down pretty heavily. They did see a nice little uptick in December in 2022, which is interesting to see. But yeah, maybe we can level this out a little bit because we've been staying fairly steady and
Yeah,
match that 2022 pricing.
I think so. I think Barry could definitely finish the year nicely.
Yeah. Sitting at 7.41 months of inventory. So yeah, tons of opportunity out there if you're a buyer, lots of choice. That's going to help you in your negotiations. Um, no real sign at the moment of this one rolling over. It's been trending steadily upwards, and I mean that's been the story of months of inventory in a lot of places, but yeah, no sign coming back the other way just yet.
Just yet, yeah.
Yeah. All right, Matt. Let's do the Simcoe condo market, and then let's wrap it up for today.
Okay. So median prices down 0.3% month over month,
Yeah.
down
Absolutely.
2% year over year, and down 4.7% year to date, which definitely could have been a lot worse considering it's the condo market. Then transaction volume fell 8.3% month over month, down 7.2% year over year, and down 9.7% year to date. So there is some stronger downturn on the transaction volume side. And then even new listings month over month down 13.2%. So a lot of people pulling potentially their condos off the market for now, maybe putting them back September, October. And then same time last year, if we're looking year over year with the new listings, we're up 4.3%. And then when it comes to median days on market, again, going from 35 days to 44 days. So taking over,
Yeah.
well over a month to move the condo off the market. And then termination volume did fall 14.4% month over month.
It's interesting talking about those median days kind of jumping up. I was looking at broker based stats the other day for Aurora, and I want to say it was 29 showings on average before a home sold. Um,
Wow.
and so even looking at 30 days to sell your house, you need a showing a day to make that happen,
Yeah.
um, which is hard to get these days, especially in the summer months. It's hard to get that type of showing activity.
It's wild though to bring through 29 people and only get potentially one offer on a property. It just goes to show you how many people are just a little bit indecisive, who are just waiting and waiting and waiting.
Yeah.
So that clearly they're out there. It's just the motivation behind it is not.
Yeah. Yeah. Very well said. Yeah, new listings high, but following the right trend line, I would say. Really, what 2018 and what's that one? Is that 2020? Yeah, in 2020, sitting above it in terms of our new listing volume.
But
That
typically, we'll start to see a peak of in September, October of people trying to put their property back on for 2 months to see if they can get any more traction before
yeah,
taking it off for the winter season.
exactly. Active listings sitting at a high, and for any of our condo markets, this is typically what we've seen. We're sitting at 717 in comparison to previous years. Even picking out 2017, you're looking back at 279 units in comparison. So, comfortably sitting high above there, which is what we'll see obviously in our months of inventory. Sales volume not at the lowest, not at the lowest. Happy about that. We're surpassing 2011. And Matt, before you say it, I know there are more condos now in Simcoe than we had back then. But nonetheless, it is one positive thing to see if I was gonna try to make some sunshine out of our sales charts.
Yep.
Medium price trucking along. Um, Kind of similar to everything. It's just above the 2020 numbers, but at least it's matching 2021 for now. 2021 sitting at 480,000 for medium price. We're currently at 479,000. And months of inventory, I will say this: the charts look much more intense on some of our last ones, but this is nonetheless one of our highest numbers at 9.8 months worth of inventory. It's been trending upwards. We did come down a little bit from where we were earlier in the year, so that's a positive sign, but in general, still trending upwards in regards to months of inventory. Very much a buyer's market when looking at
Yep.
condos in Simcoe. All right, Matt, I'm sorry, brother. I got to call it short today. We're going to have to get into the lease report in another video. Guys, I want to thank you so much for joining us. This is whether you're a real estate agent or a home buyer or a home seller, you can make some fantastic decisions based on the information that we've shared with you today. So I want you to take it to heart. If you have a realtor, reach out to them and start asking them these questions. If you don't have a realtor, reach out to Matthew or myself. We're happy to talk to you about this. If you're an agent that's looking to understand the market better, same thing. Reach out to Matthew or myself. We love talking about the market. We love sharing how we use this type of information to help our clients make smart decisions. And to be honest, in these markets right now, you need to be helping your clients make smart decisions because as somebody that's been in it 18 years, I'm very blessed to say I don't have many deals that I look back on that were bad purchases because I took all the time to look up to this, like look into this information up front. If you help somebody make a bad decision and they get stuck somewhere for 6, 7 years, can't be a good feeling. So make sure that you're taking advantage of this data because this is how you make sure you're the professional, you're educated, you can give the right advice as a consultant and let them make the decision.
Yep.
Matt, is there anything there's a bunch of stuff I'm sure we could have talked about. Anything you're looking forward to talking about on our next video?
Yeah, I'm interested to see how August plays out as compared to June, July. We started to see some acceleration in sales for those 2 months. The more and more sales that we start to see is going to start to show us that the market thinks that the prices are starting to get to where they're willing to get in the market. So if we do see a strong second half to this year, we're potentially starting to pave the way as to maybe we're in a bottom. Prices may stay relatively low for a little bit longer, maybe even 6 months or up to 12 months, but at least we're starting to form that bottom, which will give confidence for buyers in the market to jump back in there and start making more purchases.
Yeah. Yeah, I love it. All right, guys, thank you so much for joining us. We look forward to seeing you next time. And Stacy Nixon, thank you for tuning in. We always love that you watch this and look forward to seeing you soon. And if you're one of Stacy's clients and watching this, call her today and take advantage of this buyer's market out there. All right, everybody, take care and have a great day. We will see you next month.
See you guys.